Good afternoon, y'all. It's Alan Buchanan, and welcome to another edition of Thursday Thoughts for Commercial Real Estate. Hope everyone's having a wonderful week. You had a wonderful Labor Day. I can't believe this week's almost over. Hey, today I want to talk to you about the ways in which you can finance a commercial real estate purchase. And I'm going to specifically talk about SBA financing, but before I do that, there are a few ways to finance a commercial real estate purchase. Obviously, the easiest one is just to simply pay cash. The second one would be to tap a wealthy relatives trust fund, have them loan you the money. Obviously, you can do it through a conventional lender, such as a bank or an insurance company. You can do it what's called a conventional loan, which requires a heftier down payment. Or the most typical way that owner-occupants finance commercial real estate purchases is through the Small Business Association. Now, the SBA, the Small Business Association, has a couple of different loan programs for the purchase of commercial real estate. And both allow you to buy a building with 10% down, finance 90% of the purchase. The first type is called a 7A loan. The second type is called a 504 loan. A 7A loan is a bank loan to you and your company, and then the SBA guarantees the performance of that loan up to a certain point. And there are dollar limits. I believe the limit on a 7A loan is $5 million. And then the SBA is willing to guarantee a portion of that. Banks love to make these sorts of loans because they're very, very profitable. The other type of loan is called a 504 loan. This is actually two loans. The bank makes you the first for 50% of the purchase, and the federal government, the SBA, floats a debenture for the other 40%, which makes up the 90% financing, and then you inject 10% cash into that deal so that that becomes your 100%. This has been very, very popular over the years, and part of the reason is because the debenture piece, the 40% piece, is actually financed over 20 years at fixed rate financing. And so if you take the first trust deed that the bank makes you and you negotiate the very best deal you can there, you back it up with the 40% second trust deed, now you've got 90% financing, 40% of it financed over a long term, and then the other 50% financed over a shorter term, but at potentially better interest rates. So you end up with a blended rate of something today in the mid to high 4% range, which is very, very attractive financing for commercial real estate purchases. If I can ever assist you in analyzing whether buying a commercial property makes sense for you, please feel free to reach out. Call me, email me, Facebook message me. I'd love to help you out. It's Alan Buchanan saying make it a great rest of your week. This is Thursday Thoughts for Commercial Real Estate.